Hello, everybody, and happy Monday. Now, remember, last week I told you that the wind was at the back of gold. And all right, we have some short term volatility. I get that. But what's going on here? We've had gold go up $200 an ounce in what, the last 30 days? Over the last year, it's up over $900 an ounce. And you see what's going on. Even on down days, it recovers pretty quickly. What's changed? I was trying to crack the code on this. It's not that the wars increased that would have pushed gold up. Things kind of calmed down. It wasn't inflation suddenly rocketed up. It's about the same. So what's happening? I think it's as simple as two things. One is debt and one is supply and demand. So let's start with the supply and demand piece. There is something called the Bank for International Settlements. Who's this? They're the central bank of central banks. So again, the setup. We've got one central bank in the United States, the Federal Reserve. No, there's one in Europe, the European Central Bank, Bank of Japan, Bank of England, Bank of China, Bank of Switzerland. They're your motherships. Who's above them? The Bank for International Settlements in Basel, Switzerland. They're the bank of banks. Here's what they've done. Starting in July of this year, gold is going to be what's called a tier one asset, the top tier. Every bank has to have collateral on its loans. For decades, the only thing top tier was US Treasury debt, our Treasury bills, our Treasury notes, our Treasury bonds, and of course the US dollar. That was the pristine collateral. They're adding gold to the tier one part of this. First question is, okay, why? Are they worried about the dollar? Are they worried about financial restructuring? For whatever reason, they've done that. What does this mean? This means that banks need to have gold on their balance sheets. Central banks, big banks, hedge funds who are trying to do things with gold and you want pristine collateral. Okay, so what's happened? We're seeing gold fleeing the big depositories in the West, and there are really only two. So I need you to picture giant vaults, usually underground, in London and New York. They're the two main ones, the London Bullion Market Association, the LBMA, and the Commodities Exchange in New York, those tunnels under Manhattan. They hold gold. We are seeing deliveries of that gold leaving the vaults and going to, I don't know, India? I think it was like 10 days ago. India took delivery of 100 tons of gold out of London back to the mother country. They're not alone. You should see the charts on this. On a bar chart, they're just going straight up. Gold is leaving the vaults. Supply is shrinking and the price is moving up, obviously. What Walt and I were trying to figure out is why is it so controlled? It has been kind of odd. Gold to go up $20, $18, $22. It all seems very managed. It's almost as if they know that gold must rise, but they don't want it zooming up. Let the pressure off, like a pressure cooker. This is all conjecture. So that's one piece of the puzzle. And I'll do this next part really fast. We have the Secretary of Treasury, our new guy, Bessent, saying, we might be looking at a global financial restructuring. Global financial restructuring. And he used the word reset, but wait a minute, Mr. Secretary, what are you talking about here? Then we had President Trump talking about having the dollar pegged in some way to gold. Okay, now we want an audit of Fort Knox. Do we have the gold that we say we have in there? Well, I've read conspiracy theories on that for decades, and we don't know. But all of a sudden, we have all this talk about gold. I mean, come on, guys. You don't hear financial networks talking about gold and silver, this kind of thing on the news. It's always the Dow did this, the S&P did this, bonds did that. Now all of a sudden, we've got this activity around gold. Something's coming. There is something in the financial system that is going to be restructured, and gold is a piece of this pie. That's what the breadcrumbs tell you. And I'm going to add one more piece to it and close this out and give it to Walt. We know Warren Buffett, who is the insider of insiders on investments. He has been dumping his banking shares. He's been dumping Bank of America shares. He's been dumping his international banking shares. And he's been a banking stock guy for a long time. My guess is Mr. Buffett knows something that Greg in Albuquerque doesn't. And that would also be a breadcrumb that something's happening in the financial or the banking system that's going to cause some change going forward. All of this is positive for your accounts. At least we believe that here. So buckle up, but I believe we're on the right side of history. And with that, I'll turn it over to Walt.